In this episode, we're going to focus on what's been happening to date, where are the opportunities going forward, and whether this will drive an increase in activity in the second half of this year. But I should say there's still plenty of downside risks to be mindful of.
I've talked about the fundamentals of the industrial sector, Marie. What do you think are the factors driving through the retail market? How are they doing?
Well, in a really good place, actually. After a number of years being the ugly sister, no one really wanted to talk to me about retail. Things have definitely changed. The market fundamentals are massively improved. Occupational demand is massively improved. And as a result, we're seeing increased investor interest and, as a result, transaction activity. And funnily enough, I know in regards to logistics, e-commerce has been really important driving that market. Post-pandemic, it's actually been a bit of a push for occupational demand in the retail market, but in the sense that retailers are looking at their store network, existing and also growing, to offset some of the increased costs of e-commerce. Delivery costs have become more expensive, the margins are a bit more challenged, people are returning more items, and retailers are encouraging their customers to, do click and collect, do in-store returns to offset some of those costs. So as a result, occupational demand is very buoyant. We're seeing good levels of rental growth pretty much across the board, albeit, I should say, it's still very much focused on prime locations and best-in-class properties. And as a result, all of this improvement in the occupational market has attracted investors, and they're looking at retail assets a lot more closely than they would have done 5-10 years ago. But even with the market fundamentals being in a really good place, we have seen aggregate total retail transaction volumes slow over the first half of this year, which we were expecting, largely down to those wider macroeconomic headwinds that increased investor uncertainty. But there have been pockets of increased activity this year. Out of town in particular, still very buoyant, transaction volumes up 16% year on year. Central London retail as well is going to see its best ever year since 2018, and we're expecting about £2 billion worth of assets being transacted. And what's really interesting is the buyers that are being active. So private equity, sovereign wealth funds, looking at the fundamentals, the improvement in demand, the rental growth, and looking at its value relative to historical norms and seeing it as super attractive.
That's super interesting. And if you were looking forward, what kind of areas of the retail market do you think will continue to drive or attract more investment going forward?
I think, out of town again, it has been the most active. I think it will continue to be a very active part of the market. An evolving trend in that part of the market is, I suppose, a widening awakening to the attraction of the asset class. And we're definitely seeing a growing and a more diverse buyer pool there, which again will help drive increased activity. Prime retail streets in London, particularly Oxford Street, I think will present some really interesting opportunities, both from a retail and office perspective, I should say. Occupier demand is very buoyant in that market, in the retail space, and we're forecasting further rental growth in that part of the market. And shopping centres, it has been a bit quieter first half of this year. They're typically big ticket items, can be transactions that can be easily derailed by investor uncertainty, and that's definitely been the case this year. But with some of that uncertainty abating, we're expecting some transactions or processes that started earlier in the year actually complete by the year end. In addition, we're expecting about £3.5 billion worth of, top class shopping centres come to the market over the next 12 months. Again, that will help drive that transaction activity going forward. But I think one thing to flag in regards to retail, and you mentioned it in regards to your two sectors, is the importance of building quality. And particularly over the last 2 years, what we've seen occupationally is that retailers' brands are very much focused on the quality of the buildings, the units. In some locations, that's about double height frontages, good levels of configuration, prominence universally being the case. And these should be considerations for investors, whether you're looking at value add opportunities or core plus, because really it's going to be about building quality and location that will dictate rental tone, rental growth, and ultimately investment performance going forward.